Hey everybody, this is Ryan Mallory with the internet's best swing trading website, SharePlanner.com, and I'm here to talk to you today about what do you do when you have a trade that is not really going up with the market. Now, you have the market that's rallying, let's say it's going up 1 or 2% in a single day, but you have like a stock in your portfolio that just won't move up with it. It has a promising trade setup, it has all the features that you would want to have in a good trade opportunity. The risk reward's right, but it's not moving up with the market. It's just stagnant. It's not really going down. It's not stomping you out, but it's not going up either. And that's going to happen a lot as traders. You're going to be faced with these things. And so do you keep holding on? Do you go ahead and just, cut your losses or take whatever small profits that you have and move on to the next trade? Or do you do something else? And so in this video, what I'm going to do is I'm going to dissect a current trade that I have that's doing exactly that, and another trade that I've also done. And just to show you exactly how I approach such a stock. So it's important to note that in any kind of market, let's say the market's up 1%, you're going to have about 3 or 4 stocks moving up for every stock that's moving lower. So just because the whole market the market as a whole is moving up doesn't mean that every stock is moving up. So it's possible that 80% of the stocks are moving higher and 20% of the stocks are moving lower. And if you have 5 positions in your portfolio, that means you probably have one that's actually trading lower on the day. Or if you have 10 positions in your portfolio, you have 2 positions that are trading lower on the day on average. So let's go ahead and look at that. Let's talk about what I think you should do or how you can approach a trade that's just really not being cooperative with the overall market direction. So this is a good example. Today you had the S&P 500. It was up 20 points or about 0.75%. Now let's pull up this trade Wayfair. I bought into this one last week. It was very promising. You can see here it was coiling really nicely. I put my stop loss below this $82 mark here, so about 82.29. And then so far it just really hasn't done anything. It's just been stagnant. And I'm really not making a lot of money off the trade. I think I'm only up about, like a 0.5% or so. And then you have the market that goes up today, 0.75%. And I'm thinking, okay, with the beta that Wayfair has, which is about 1.5 to the market's move, if the S&P is up 0.75%, I should be looking at a move easily over 1% for this stock today. But it's not. Instead, I'm down 0.2% on the trade. That's not a lot, but it's still irritating because it would have been a nice addition to the portfolio to have that going up with the market. So what I do is I try to look for an area of support that the stock is finding support at. And what I don't want to do is just go ahead and cut losses right away. I want to give it some time because there's times where the stock will eventually catch up with the market or it will eventually break out on its own timing. And you have to be a little bit patient with it. So you don't want to just go ahead and cut and run, but you also don't want to give it a blank check to just go ahead and figure out what it wants to do for however long it takes, because the time that you spend in one trade, if it's not doing anything for you, that's time that you could have spent in another trade actually making a profit. So time is important, but you have to be gradual about it. So I try to equate it to like tightening the noose around it, right? And so if my stop loss is originally here at 82.29, I noticed, since it's rallied, it's found support at the 10-day moving average throughout, or at least it hasn't breached the 10-day moving average. So if it actually did break the 10-day moving average, that might be a heads up to me that there's a change in character in the stock and I want to go ahead and get out and move on to the next trade. So what I've done here is just simply, I have my original stop loss here below the May 15th lows. And since then, I've just been gradually raising that stop loss. And so going into tomorrow, I'll have my stop loss at around 84.63, which gives me still about 1% of wiggle room. It's not a lot, but the noose is tightening on the stock. So I started off with about a 3% stop loss on this trade, and now we're down to about a little over 1% of a stop loss. So it's going to have to make up its mind eventually whether it wants to cooperate or whether it wants to get stopped out. Another stock that I did this with, and I didn't walk away with much of a profit, and you can see here it's a similar chart pattern, and it had a very similar consolidation, and eventually it did break out, but you can still see even on these breakouts, it's given up most of its gains on the day. So even though now I'm not in the trade, you can see where it's still struggling to make ends meet here. But I got into it. I thought it was going to break out, and what you had is this day here on the 15th. It got me stopped out, and I went ahead and took a small profit on the trade, and then the next day it pops higher and then comes back down a little bit, and it's just really still not going anywhere. But I did the same thing in a very similar fashion. I raised the stop loss using the 10-day moving average. And once again, it doesn't have to be the 10-day moving average. You might find support at the 5-day moving average or the 20-day moving average. What you want to do is you just want to continue to gradually increase the stop loss on these trades that are not being very cooperative, so you're not giving it an indefinite amount of time to figure things out. At some point, it does need to move for you. And so this is a good mechanical, unemotional way to make sure that you're giving the stock ample amount of time while not just forgetting about it over the long run. And so RH, it did break down on me, and it broke below the 10-day moving average. I got stopped out for a small profit, and then it kind of trended higher a little bit. It's higher from where I got stopped out at, but nonetheless, you can see it's not been a very easy trade. Even if you had stayed in it, there's been some frustrations there for the bulls where it's giving up the majority of its gains on the day. So these are two examples here. One is an active trade that I'm currently in, Wayfair, that's the symbol W, and then Restoration Hardware, which symbol is RH. And in both cases, I just did the same approach with both of them. I tightened the noose on them. Now, sometimes it may, like we saw here with Restoration, it tried to move higher thereafter. I don't know what tomorrow holds, but sometimes it's going to completely crash and burn on you. You'll be glad that you tightened that noose on it and just tried to minimize the loss as much as possible on a stock that really wasn't being cooperative with the overall direction of the market. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.